The stock market is just like a sabzi mandi. Now, sabzi mandi means the vegetable market. Just like you go to the vegetable market or the grocery store and you buy your tomatoes and potatoes, you would be buying the equity shares. That is your tomatoes and your potatoes, because potato. When you, the buyer, are going to the seller in the stock market, you buy from them the equity shares. Did you know that in the earlier days there used to be exchange of actual papered documents when it came to buying and selling equity shares? Now these days, as you can see, the equity shares are bought and sold in crores of quantities over the stock exchange, which is done electronically. Before it was done paper. Can you imagine one paper being sold and exchanged between each buyer and seller? So now equity shares, just like the name share, means that you own a share in the company. So you're exchanging it between other investors and you're buying it from the company who actually issued them. When you buy an equity share, it means that you are part owner of that company. And this same ownership is exchanged between all the investors in the stock market. So how do you get the shares that are issued by the company? Either you can buy them off the stock market, that is the investment platform. You can directly buy their shares, or when the company first comes out with a procedure or a process called the initial public offering, since they want to raise capital, that is extra money for whatever reasons, maybe if it is expansion of their business, maybe it is bringing out a product, or they just want to pay off their debts, they raise additional capital from the public, which is called the IPO. You must have already heard about the IPO. So what IPO does is that they take money from you and in exchange they give you a huge number of shares. Now the minimum investment is normally around 15,000 rupees. You need to buy at least one lot if you want to apply for the IPO. Once you are approved as the investor, they will take the money from you and the equity shares will be directly transferred to your Demat account. Can you imagine free money for the rest of your life? Now, this is exactly what dividend is. Now, dividend is a reward of some sort that the company gives because you have bought and invested into the company. When you buy shares and you invest a money into a company, every year or every 6 months, the company gives back to the shareholders, that is you, in terms of dividend. Every share you hold, they will announce per share maybe 10 rupees or maybe 1 rupee or 2 rupees, whatever it is. They're going to be giving you, that is the investors, every year. And this acts as passive income. And the only reason why many of the investors who are in the long term game invest lakhs and crores of amount in companies' shares. Dividend is basically thanking you for investing in their company. Three reasons why you should invest in equity shares. Number one, compared to other traditional investments like gold, fixed deposits, and real estate, equity shares give a very huge amount of return compared to its risk. Number two, you can save your taxes by investing in equity linked insurance policies or equity linked mutual funds. Now, these mutual funds and insurance policies can be claimed under Section 80C and save your taxes of 1.5 lakh rupees. And number three, it acts as a passive income. If you invest a huge amount of money in companies that pay good amount of dividend, they give you bonus shares and they also give you right shares. So this acts as a long-term investment, which again can help you in saving your income because you will get tax benefits when you sell your shares after a year. Did you know that only 2% of the Indians actually invest in the stock market? Now, there are many reasons which lead to this very minimal amount of investments. Now, some of those reasons are lack of trust. People don't trust the stock market. It is called as gambling, and many of our elders, including our own parents, have obviously stopped us from investing in the stock market until we actually told them what the stock market is. Number two, lack of knowledge. Now, many of the investors who enter into the stock market think it is free money and it can be just earned without any knowledge. Now, that is a mistake that everyone does. They enter the stock market without any prior knowledge and lose a lot of money. People have lost rupees in lakhs. And that is exactly why knowledge, that is, you need to study about the stock market before you actually enter it. Number three, there are other options which are risk free, such as gold, fixed deposits, and real estate. It is less riskier compared to equity shares. So, before you actually start trading, you need to open a Demat account. Now, Demat account, the procedure is done by the investment platforms themselves. They ask you for the Aadhaar card, they ask you for your PAN card, and they ask you to verify your identification by making you fill various forms. Now, it has been made electronically and it has come down to less than 5 minutes. The process, that is. Otherwise, you had to go to the office physically, fill the form, and give it to them. And if you lived in a different state or a different city, you had to fill the form manually and post it to them. So, to open a Demat account, all you need is 5 minutes of your time. And once you're done that, you are a one step closer to starting your stock market journey.